Hi guys, welcome to another video. So today is June 21st. So today is Wednesday. So today this video will talk about UK, especially is the housing market. So many of you has been asking this question: should I invest in the housing market in UK, or if I own a house in UK, what should I do? So we answer this by answering this question, we'll kind of investigate the policies that are happening in the UK, and also the the terrorist attack in the UK that is really concerning. So should I invest in the properties in the housing market in UK? So this is the question that we're going to be studying today in this video. So in the end, I'm going to also study the money flow and also the current situation in UK. So whether or not you should invest in the housing market in UK, so you will have a better understanding after this video. So first of all, if you haven't subscribed to our channel, please do so now by clicking this button and also the notification button. So all of the videos that will be shown on the screen first place, so you can check out our videos firsthand. And also you can like my Facebook page. So hopefully you can also comment in the comment box below. I can answer your questions one by one. And if you like this video, please like and share this video to your friends so you understand more, so then you have a better understanding and preparation of what you are putting your money and yourself into. So first of all, we'll study the before studying the policies in UK, we have to understand that the issues going on in the UK, including the Theresa May, the UK election, that she is not going to get more than 50% of the power to control in the parties, right? So then, especially also with the president in France saying that, oh, UK, now you're leaving the Eurozone, I won't let you go that easily, right? So that we will be having harsh terms when you are exiting the Eurozone. We've talked about that in the previous videos. So now you can look at the pounds. It's going a lot. It's going really weak right now. So that means money is leaving UK now. But we have to study the midterm and also the long-term effect for the UK housing market. So we have to study the policies that are going on in the UK. So that is really bad news, that because recently, just recently in this year April, they have a tax deduction policy that is most likely to affect people who buy a house and and also rent it out to people, right? So that is really, those people are pretty not using not going to buy the house. They're not using it now, they are not using it urgently, so that they have this policy that tax deduction thing is cancelled. So they will gradually change the formula, so estimate to be until year 2020, so people will no longer have any tax reduction in the UK. Okay, so that is the latest policy. That is pretty bad, because last year we know and we understand that they had great deal of confidence that they will be leaving the UK. The UK will be leaving the Eurozone pretty easily, right? But now that they have more policies that are launched in that is launched in UK, then now we're facing the Theresa May issue, the terrorist attack, and also the France election, the president saying that the UK we're not going to have a soft Brexit, right? So after this, this is really pretty bad. So we really have to distinguish two directions of the policy that will be launching, that are already launched in the countries. The first direction, the policies are more about really sharp and short term. It's about affecting what on your buying decision or your selling decision. So the second direction of the policy is more like gradually that will affect your is probably painful for a period of time. You have to pay more tax every year. You have to pay more money every month. That is something that is more crucial and more important, more painful, right? So if we want the housing market to go up, we really don't want to see policies coming up with the more of aligned the second direction that I've talked about. So this that tax deduction thing is sort of in the second direction, right? Because I used to have tax deduction, but now I don't. So that is something that we should consider, but not that powerful. But the powerful thing is that it's really recent, okay? So the second thing is the 3% stamp duty land tax. So that is, honestly, that's nothing, right? Because during this 5 years or 3 years of the housing market booming, every country have sort of this stamp duty tax, especially in Singapore, Malaysia, and also Hong Kong. So they have this tax, but the tax is really, really big. So if you don't know this, in short, we say the stamp duty in short is SDLT. So people in UK will understand this tax, right? So if you buy a house that is more than 1.5 million pounds, which is kind of it looks like expensive, but people, believe me, people can have this purchase power in UK, and especially from Chinese, right? So the new additional property tax rate will be 15%, okay? So that seems a lot, right? But that is something more of its first direction. It's something that gets into the head, telling you that don't buy a house now because the tax is really high, right? So that is not as bad as in Hong Kong, right? Because in Hong Kong, we have the same stamp duty there, but it's more like a gradual. So if you sell the house within first year, you pay 15%. Within second year, you pay 10%. It's more like gradual. It's something that you don't, it's not just get in your head in at the decision when you're buying a house. It gets in your head every year. It's longer term commitment. Say that, oh, if you buy a house, you really have to commit for at least 3 years. Otherwise, unless the housing market is going up for 5 to 15%, or else you will be losing money to who? To the government, right? So this is a bit serious. The third policy is more like to protect the bankings in the institution that are doing mortgage credits, okay? So it's more like laying out all the documents to the buyer and explain it, the mortgage terms longer to the buyers, and hopefully they have a slight resistance and slight pressure of not buying a house, okay? So also they will add a 7 days cooling off period. So if you really have a good selling skills that you can sell your mortgage out to someone, then they have 7 days cooling off period, so they can cancel the agreement without any penalty, right? But honestly, who cares about this term, okay? Because if I buy a house in UK or in US, right, I know that I'm going to do a mortgage. If not that I'm going to do with the bank, I will do it with the bank B, right? It's never about the sales in the banking, so that's nothing, okay? So people really scared about when this policy came out in last year April, right? That's nothing. That is something like more like the Eurozone. The Eurozone is using the mortgage credit directive. This term, this policy has been using for all the countries in Europe, the EU, okay? So the fourth one is annual tax on developed dwellings. So this is pretty powerful, because mainly it will be it will affect the people who using the registered company to purchase a house in UK. So again, this is not surprise, but this tax is not as high, right? Because usually the house worth around 2 million to 10 million pounds, right? 10 million pounds is pretty expensive, but nowadays we talk about millions in the housing market. So you have to pay the taxation, the tax to government around between 20k pounds to 50k pounds, right? That's expensive, that's a lot, but again, that's not really the end of the day, right? But you're going to pay this tax every year, alright? That's more like the second direction. So these are the 4 policies that are more important, so you can add. If you have found something that you think that they're more important, please feel free to leave your findings in the comment box below, so we can discuss about it, so we can study about it. But we say the main thing is the UK was pretty confident in their independence in the Brexit, right? So the policies would keep the policies about the housing market policies kept launching without like hesitation. The latest one again is the one that is launched in April this year. So with the current situation, the current problems and the issues going on in UK, that is pretty bad. Okay, how bad? You see, again, the pound is getting really weak, that means people, the money is leaving UK. Not as bad because technically, if it breaks below the 1.25 to USD, that is really, really bad. But I think in the longer run, it won't be going down back to the 1.2 area. But again, this is something that is short term that we have to we have to understand. So for the midterm, the housing market, how they will do is about the is we have to look at the policies. So now in the midterm, the short term, the housing market will adjust. Okay, but amount of time or how much it will adjust depends on the what Theresa May is going to do, and also what the UK is going to do, and if they going to have some more some better terms in Brexit, right? So if they Brexit, they can still do tradings with the EU, and also they can also do tradings with the US, right? But I'm sure Donald Trump and President in France won't make this happen that easily. So if you want to do business with US, that okay, that's good, but you really have to draw a line between you and the Eurozone, right? So in the longer run, we will have to look at the interest rate. We have talked about this in another video. So now the interest rate is just 0.25. So understand that we're always talking about the economy will be this bad in UK, will be killed, will be doing so bad in the next 2 years or 5 years term, right? But now the economy of UK now is still the second biggest country in the Eurozone area, right? So the economy is really, really good. And also the interest rate is so low that the bubble doesn't even exist in UK. Why? Because if you borrow money with such a low rate, can you pay up your mortgage? Can you pay your debts? And can somebody who can't pay up their debts will die, and the institution will be bankrupt? And also, so if that's not going to happen, the housing market is safe in long term. Okay, so now the answer is yes. You can invest in the properties in UK without any. UK is pretty good without any terms like Hong Kong, so you can invest in that as long as you can pay the debts, pay the tax now, and you know you have to pay the tax, and also the more time of listening to the sales in the bank talking about all those crap of the mortgage documents, right? But other than that, it's fine, okay? But in the short term, I suggest that you have to wait because the terrorist attack and the money is leaving in UK, and also the policies are launched at the wrong time, okay? So I think the the housing market will go down a little bit, depends on what the Theresa May will going to do, or if she's going to do it good. So, but in the midterm or long term wise, in the longer run, the housing market should be pretty good. But again, I talked about it in the previous video about the interest rate versus housing market. So the 100% statistically, 100% of chance that there's a housing market in one country that is going to hit historic high again and again. That is US. All right. So if you like this video, please give me a thumbs up, and also share this video to your friends so that you and your friends and your relatives and everyone will be doing a better preparation of what you are putting your money and yourself into. So before next time, I'm Greg. So have a good Thursday, all right? I'll see you Friday. See you next time. Goodbye.